Good day. So it is Sunday. Happy Sunday, people. May all the Sundays be Sundaying with you, or whatever silly nonsense. No, seriously, you're having a great day, wherever you are, whatever time it is, and that you're doing good things, most importantly. So what is happening in the crypto market? You may have noticed, right, so far this weekend, a very nice little trending moves on some assets. Right, Saturday saw a bunch of nice movement on coins like Litecoin, XRP, Solana to the upside. They had a very nice little run to the upside. I hope you took your profits if you were in any of those. If you did, congrats. There were a bunch of meme coins that also pumped nicely. Bitcoin was kind of, testing the central daily range for a lot of the day before it dumped out a little bit on a little trending move on what was a day with, a pretty tight central daily range. So seeing a trending move or two was not a surprise. All right, once it hit that third standard deviation band to the downside on both the RMLRs on the 15-minute, then it was just a matter of time, right, before it stopped hitting those bands and began the process of mean reversion, which it did fairly quickly to the 1110, and then took its jolly old sweet time to complete the mean reversion to the 3012, but it did, right? And when I say it did, I mean it completed that mean reversion before hitting that third band to the downside again, right? That's how that goes. So all in all, it did what it's supposed to do, and that is not a surprise. What's it likely to do today? Well, same thing. It's likely to move along the VEPs, right? The VEPs information is the leading information that tells you the tendency of the probability of the direction of any asset on any time frame. And if you look at Solana, is it possible that Solana breaks up above $300 today or this coming week? Well, it's certainly within certain probabilities. It doesn't mean it has to do it, obviously. Just like Bitcoin doesn't have to cross above 100,000. It's come really close. It was at like 99.6 on a whole bunch of indexes. Maybe there's some indexes where it did actually. Who knows? Maybe in Korea somewhere, South Korea. Maybe it punched up above 100K with the kimchi premium and everything. But on, like on the index chart, on Coinbase and Bybit and, Kraken and all those kind of usual, Binance, all those places, it came, just shy of 100K, but didn't quite hit it, right? And it does not have to hit it. But who knows? Maybe people will be like, I'm sick of this, and they'll just start selling off all their Bitcoin and never buy it again. I don't think it's going to happen, but it's possible. There's always probabilities. Hello, you subscribe? Well, thank you. Good to see you. So yeah, and what's happening with Dogecoin? Also, Dogecoin had a very nice weekend so far, having moved up. Again, running up on the VRE charts, you can see it to the target levels that it went up to very nicely. We actually covered that yesterday during the Alpha Trading live stream. We did a special Alpha Trading live stream yesterday because the one on Friday was a bit loopy. But yeah, actually we'll see. Maybe we'll start doing more Saturday streams. But Doge certainly has made a nice move. Interesting thing about Doge is if it doubles, or I think if it doubles in value from where it's currently at, like, if it did that before, let's say Solana moved up significantly, it could actually flip in value over Solana, which is kind of mind-blowing, that it would be like the fourth highest market cap crypto if it happened. I think right now it's like 5 or 6, whatever, maybe 7, who knows. Anyway, it's a meme coin. Don't forget that. It's in the top 10 cryptocurrencies insofar as market cap. Yeah, it's kind of crazy. Also, something interesting happened between Friday and Saturday, right? On a day that wasn't even such an insane day of trading, but it was a lot of flipping happening between Bitcoin and altcoins. And what happened? Well, you could see it very clearly, not just because of the Bitcoin dominance. It was still holding up pretty nicely, but it had dropped below 60%. And when I looked at it yesterday, it was like 58.8% or something. So there was some movement towards the altcoin space for sure. And you could also tell that because USDT, Tether, had something like $17 billion worth of volume more than there are actual USDTs. So I forget that. I think it's like 132 billion USDTs or something like that. And there was like $148 billion worth of USDT volume, right? Meaning there was more volume than there actually was underlying asset, which obviously means, there's a rate of more than 1-to-1 in terms of its usage, right? Now, that's not, by any means unheard of. It's not like it never happens on anything, on any asset. Sure, it certainly does, obviously. But, when you see most coins tracking at a percentage of volume that's less than 100% of the underlying asset, and then the stable coin that's used to convert, to switch around money from, let's say, Bitcoin to profits, and then people will use those profits to buy some altcoin when they figure out what they want to jump into. It tells you that's showing you that it's indicative of a lot of movement going between Bitcoin and altcoins, and also in reverse, going between altcoins and Bitcoin. When you see the altcoin, pattern, or not pattern, but cycle of preference kind of end, and people reverting back to buying more Bitcoin. Now in this market, we typically see people going from, Bitcoin to altcoins, and then they'll go to, stocks, and then they'll go to like silver and oil, or gold, silver and oil, commodities, and sometimes Forex in between, but then they'll come back around to Bitcoin, and the reason for that is quite simple, right? They're just cycling through different asset classes. But as the crypto market evolves, and you have more and more people who are true crypto degens and who just want to, trade meme coins and altcoins that are like on page 50 of CoinMarketCap, then what you actually see is people just staying in the crypto space, a lot of those, and not ever, dealing with traditional asset. Many of them don't even have a traditional asset account, like on, Charles Schwab or anything like that, Thinkorswim, which they bought, right, or Tasty or anything like that, or even Robinhood or any of those kind of things. They're in crypto. That's it, and that's it's perfectly fine. Why not? But just keep in mind, it's obviously with the volatility, which is what we want, but with the volatility comes the additional risk. So bear that in mind, right? And that's why stable coins are actually very useful, right? Because you can, if you need to, you can cash out. And you can usually do that pretty quickly, even if you're like trading on an exchange or whatever. But or even if you have certain wallets, you could also swap right on the wallets, right? You can swap your coins, whatever they are, into stable coins. Usually that's pretty easy to do. Just make sure you keep your wallet safe and secure, because it definitely sucks to have your wallet get drained by social engineering hacks or cracks and other stupid behavior patterns, clicking on a phishing link, not knowing it. And those phishing links, by the way, can be very inconspicuous. Like, they could be, you clicked on a link that somebody sent you in LinkedIn, you weren't even thinking about it. Or they sent you a link on Twitter. Twitter, by the way, is like notoriously hackable. Or I guess X is what people call it. Notorious for being hacked and for social engineering. And Discord is extremely notorious for that. right? And like if you have mobile applications on your phone, obviously, like if you have wallets or whatever, I honestly recommend not keeping them on your phone, because those are big porous holes just waiting to be exploited. Also, if you limit the number of entry points that you have, let's say you have a hardware wallet, great, and you keep that secure, great, and you only connect it to your main computer or whatever, laptop, whatever, desktop, whenever you actually need to use it, and you don't keep any software on your computer about it. So even if anyone was to go on your computer, they wouldn't see that you have, let's say, the software for that particular hardware device. And I know it's a pain, but every single time, like, depends how often you use your crypto wallet, right? If you're actively trading, okay, that's different. And you should have a standalone machine that has like literally nothing on it, no messengers, nothing. The only thing you have on there is the software for your hardware wallet, if you need it, and your trading, your exchange application open, so you can send to and from and use your device to trade, and obviously don't have your hardware wallet connected except when you're actually sending money from it, or sending crypto from it, right? That's one easy way to keep that secure. If you have software wallets, keep as little in them as possible. Don't ever keep like more than, as they say, more than you can afford to lose. But forget that. Like, don't keep more than a sandwich in there. Like, seriously, it's just a bad idea, right? They're big gaping holes ready to be exploited. You should definitely not have software wallets on like any machine that is using the net without a VPN, and you should definitely not be opening links to anything from anyone on any machine that has any kind of wallet on it, like, ever, right? It's just a bad idea, It can even be something as crazy as like you walk in an area with your device that has a wallet on it, and you walk through an area where somebody is just snooping for data, and you happen to type in your wallet password on your device as you're walking through their Wi-Fi hotspot or whatever, and they made their Wi-Fi hotspot public, and as you're walking through it, your phone, for whatever reason, switched from your 4G or 5G network to their free Wi-Fi. For whatever reason. It can happen for a lot of reasons. So temporarily you were on their Wi-Fi, and they're just picking up every single packet of info you're sending right through their box. And as you walk through and type your password, guess what? They got your password now. That kind of thing happens all the time. Then the next thing you know, you open up your wallet and it's drained. Let me tell you, that's not a fun feeling. It's not a fun feeling. All right, so, we got the thing again with the image pros. So now we've got all this happening. Okay. All right, guys. Well, anyway, like I said, keep an eye out on what's happening with the VEPs. And that's what's going to happen. That's what's going to tell you what's going on with the assets. That's what's going to tell you whether to long or to short any given asset at any given time. And as always, if you want to learn more how to do that, just go to alphatradinghq.com/Discord. And that's it. You learn for free. If you want help, you can get tutoring. Just ask me or ask Bilbo. Go to the Shop Alpha channel and check that out. Okay, guys. See you. Cheers.